In my last video, I concluded Luckin Coffee will go through bankruptcy restructuring in order to stay as a going concern. And the main reason was I don't believe whatever cash that they have on hand will be able to cover their obligations. So I spent a little bit more time trying to put a rough estimate on a number of exactly how much they need to pay back to litigations and all the claims that could come their way. So I did some research looking into court filings, Luckin Coffee's SEC filings, and how the SEC had dealt with similar cases in the past. While I'm not a lawyer, I don't know all the intricacies that's involved in litigation, in kind of negotiation process. But since that information is now readily available anywhere, as an investor, I had to basically just do my best trying to come to a rough estimate. And I think the number I came out with is pretty reasonable. It's definitely not astronomical. And if anything, it could be on the lower side because we don't know how large of a sanction the SEC will pending to Luckin Coffee. So before I start digging through the details, I want to just go over some very high level stuff. This will provide an overarching theme to how this matter will be handled. There has been no precedence because before Luckin Coffee, there was never cooperation by the regulatory agencies between China and the United States. So the PCAOP stands for Public Company Accounting Oversight Board. It is an organization that oversees the entire auditing process, and it acts as the last defense for the accounting integrity of all U.S. publicly traded companies. So for any company that wants to be listed on the U.S. stock exchange, they will have to use an auditor that's currently a member of the board. So the position is very prestigious because it grants a artificial oligopoly to the Big Four, who are currently members, and the PCAOB is not granting any membership to a auditing firm that's currently operating in, for example, China, because it's almost impossible for them to apply any kind of oversight. The PCAOB is trying to investigate into Ernst & Young's process as far as auditing Luckin Coffee's numbers. And potentially, if the findings prove that they have negligence, they could take away Ernst & Young's membership. And I think the next point is a very important overarching theme that will ultimately decide how the Luckin Coffee case will play out, which is the political environment that we're currently in. Donald Trump just ordered a $50 billion federal pension fund to steer away from any Chinese company holdings. And he is pushing very hard to exclude any Chinese company who do not comply with Sarbanes-Oxley. Even though there could be political motives behind Donald Trump's push, recent scandal from Luckin Coffee just provides a lot of ammunition and support for whatever Donald Trump wants to do. And ultimately, this will allow U.S. regulatory agencies, such as the PCAOB, to have a tighter control over how foreign companies behave, and ultimately just giving them more power. And if you have control over a company that played a very important role in another country's economy, then ultimately you have control over that country. And on the other side, we're really witnessing something that's unprecedented. For the first time ever, the Chinese regulatory agency is trying to be transparent and cooperating with a foreign entity. Because China is currently having an international public relations crisis, and Luckin's scandal further reinforces that negative perception towards Chinese people and Chinese government. And the regulatory agency is proactively trying to manage this risk. And we're already seeing this in motion, because after March 1st, it came out with a long-arm jurisdiction, grants them governance over any foreign registered or listed entity as long as their actions have negatively impacted the Chinese business environment or investors. Now, exactly 1 month later, Luckin Coffee will be their first case. And they can use this as a case study to demonstrate to all the businesses in China, as well as everyone that's looking at China with a magnifying glass, to show that we have credibility. we are able to distinguish right and wrong and assess proper punishment for financial criminals in order to regain its credibility and investor confidence in the United States. And the CSEC official has already made a public announcement to condemn the action of Luckin Coffee and announced that they will cooperate fully with the SEC. So they are making a statement and they are making a stance. We're already seeing this in action because at the end of April, the Chinese Security Exchange Committee sent out an investigation team into Luckin Coffee's headquarters, and they seized a lot of company documents and financial records. And just given the recent development of the CEO being let go and the COO shows that the investigation is making some progress, and they are really looking to find all the culprits. And hopefully by doing so, China will regain some of its lost credibility and regain some of the investor confidence. And as far as the investigation goes, I think with increased transparency and open cooperation, I think there's a higher likelihood of the people being responsible being charged criminally. So I think there is an increased incentive for the senior executives to actually cooperate and disclose all the information, because the more people that are involved, more of the responsibilities start to shift to the company and less to the individual, and hopefully they can avoid jail time. So I just spent some time explaining the overall macro environment Luckin Coffee's story is playing out in. And next, let's move on to some more specific information about how much I believe Luckin Coffee is liable ultimately. So on the SEC website, they actually have very clear description of how they determine the potential liability faced by the company. First, we establish a point in time before the fraud happens. And we use the security value at that point in time as a baseline for the value of their secondary option without the added benefit of their faked financials. And the next determinant, which is purely used to assess the fine, is to determine the severity of the fraudulent activity. So if they were somehow to prove that it was due to negligence, obviously the punishment would be much lesser than if it was intentional. And even within intentional, there are kind of different counts of violation. If you just increase your revenue, the more areas within the financial statement that you try to manipulate, the harsher the punishment. And even within increasing revenue, the severity is different between recognizing revenue earlier versus fabricating revenue out of thin air. And in Luckin's case, they are towards the more serious side because they were not simply just trying a better revenue stream. They were actually trying to play around with different components of their income statement in order to fabricate a much more complicated story to sell to the investors. So the SEC has a statement in there. So the complexity of the fraudulent activity is a key determinant to how heavy of a fine they will be handing out. So now we have established the value of the security under normal circumstances. Then we need to find the point where their strategy of fudging their financials start to pay dividends. So within a 90-day period, we see the stock price start to change, and their gain is the difference of the security value in between those two time points. And another consideration to determine how much of a fine to hand out, depends on the solvency of the company, because the SEC's ultimate responsibility is to protect the investor's interest. So they have to consider the financial health of the company and their ability to actually compensate the investors first, because the SEC cannot take the fine at the loss of the investor. So if the company has no ability to pay a large fine, assessing it is pointless because they will never be able to collect. A very interesting piece of information I found was a whistleblower actually gets 30% of the fine if it's over $2 million. So whoever handed that anonymous report to Muddy Waters will be getting a very sizable reward for all the work. And next, we move on to the penalty side. So obviously, first, based on the determinations on the left, the company will have to at least return the ill-received gains. The SEC calls it disgorgement. Next, the investors will have to determine how much loss they have incurred. Their actual loss might exceed the amount the company actually gained. So The investors want to use the class action lawsuit as a way to try to recuperate as much as they could. And after that, the lawyer fees will also be covered by the defendants. Right now, there are 2 class action lawsuits that have already been submitted. They are all publicly available. And in those claims, the lawyer fee and the court fees were included as part of the settlement. And the final component is the SEC fine, as well as fines that will be enforced by the CSEC, the Chinese Security Exchange Commission, because now they have jurisdiction versus the long arm provision. I did some simple calculation. Hopefully you will be able to follow me here. They released their third quarter earnings on November 13th. The stock price on that day was $20.85. As soon as they released a very favorable third quarter results while giving a very optimistic guidance for the fourth quarter, their stock just skyrocketed over the next 2 months, increasing a total of 160% at an all-time high of $51.38 on January 17th. However, Luckin Coffee was not able to realize the full value. They did a secondary offering at a price of $42 on around January 15th, as well as a convertible bond at a conversion price of $54.60. I subtracted the difference between the offering price and the stock price pre-financial reporting, multiplied by the new shares that were offered in the secondary offering. What I got was, through its convertible bond, they gained $447 million. The bond has an original value of 0. So basically, they were able to gain the full amount. When they did their secondary offering, they actually sold 10.35 million shares for themselves. They received an additional gain of $218.9 million, while the other equity holder who also sold 5.52 million shares, which is Centurion Capital, realized a gain $116.7 million. When you add everything together, I get a total gain between $782 million to $931 million. So I applied a range for the total gain. The lower end of the range is based on the $42 stock price, and the higher end range is based on the peak stock price of $51. So this is the computed range that the company would have to return back to the SEC, even if the investors didn't suffer any losses. And now let's move on to the civil litigation side to find out how much investors actually lost through this scandal. First, I used the closing price on April 2nd at $6.40 as a baseline. Or you could argue the lower end of the stock value can be 0. So again, I'm applying a range here. The secondary offering, investors spent $42 per share for a total of 15.87 million shares. That went directly to Luckin Coffee, and the amount the equity holder liquidated a portion of their holdings. Because it's very hard to compute all the transactions that took place between their IPO until their secondary offering, for this class action lawsuit that was submitted to the court, plaintiff was just using the IPO price as the basis for their original investment. So let's use $17 as the price that investors collectively spent to purchase. The actual amount could be much higher because some people might have bought it at 20, 25, 30, and then they experience a loss. And maybe they still can recuperate, but that's a case-by-case analysis. For the purpose of this general estimate, let's use a lower number and lean on the conservative side for the purpose of this exercise. They originally issued 33.6 million shares through their IPO at the price of 17. Then in just simple math, use the number of shares issued at 17 plus the number of shares that were issued at 42. That's the total amount investors invested. Then you have to subtract the number of shares multiplied by the ending value. So the higher number of the range, I use 0 as the closing price of the stock, and the lower range is using the 640 on April 2nd. The next line item, which is the bondholders' claim for $155 million, that is already public information, and that amount of assets has already been frozen. The next component, which is the lawyer fees, I use the real range for the class action lawyer on the SEC website, and the range is between 25 to 30% of the overall settlement amount. And the number I here used is 30%, the number in the middle. And after applying the 30% to the sum of the equity holder claim and the bondholder claim, now I have a range for the lawyer fee between 323 million, 418 million. Now we have an estimate for the total litigation. For the civil litigation claim, let's move on to the actual litigation itself and try to add everything up. The list of defendants on the left is based on actual court records. There are 2 outstanding litigations. I used the one that is more comprehensive while making sure including all the intended defendants for both litigations. So first one on the list, obviously Luckin Coffee, followed by all the C-level executives, the CEO, the chairman, CFO, the acting CEO. So while a lot of people believe the acting CEO is a sign of the company cleaning house, he was one of the co-founders and he followed the footsteps of the chairman for, over the past few years. He is still very close to the core that is rotten. And just on a side note that has nothing to do with the litigation, his background is a PhD in transportation, which has nothing to do with coffee, running a company, or retail. So I really don't know how that's going to go. The plaintiff are trying to include as many parties as possible so that they maximize their likelihood of recuperating their entire loss, just in case that Luckin Coffee does not have enough assets, which we will see they won't at the end of this slide. So next in line are the 2 original private equity firms that helped to build up its initial value in preparation for its IPO, Joy Capital and Centurium Capital. And Li Hui and Liu Erhai, they are their respective heads. And then is the investment banks that help the company to go public, which include Credit Suisse, Morgan Stanley, Chinese International Corporation, Hong Kong Securities Limited, and then KeyBank, I believe, was also another early equity investor, and then Needham and Company. So a lot of people here. The only person they left out of this list is the COO, who Luckin Coffee identified is the mastermind that orchestrated this entire thing. I really feel bad for him because he might actually go to jail for some of the top guys, while it doesn't even garner the respect to be sued by the investors. I mean, just an honorary mention would be great. Oh man, such a poor guy. He owns nothing. He has no financial interest in orchestrating this entire scandal. He only has like 40,000 stock options, which were not worth anything at the time, probably like $200,000. And the investors don't even bother including him because they know he is just a regular employee. How do you really trust this company at the time of them revealing their own financial fraud? They were still making another story to cover that up. I mean, when does it really end? I'm sorry to go on a tantrum. Now let's go back to the fun part. Let's just do some math and add everything up. First, their debt obligation that they still have to pay back at maturity, which is $400 million. Even though they're obligated to pay for the current bondholders' losses, original loan principal at the end of 5 years. So you add $400 million to the civil litigation between 1.4 to 1.8 billion. I use the higher number. Remember, in the first slide, when we calculated how much the company actually gained, it was actually less than what the investors lost. So we want to use the higher of the 2 number to claim. So you add 400 million to the civil litigation, and then SEC will slap a fine based on the amount of the claim. And the 50% number is from a table that's straight from the SEC's website based on past 10 years total claims versus additional fines. And the fine, when you average all the years, is about 50% of what is claimed. At 50%, we have a range between $700 million to $900 million. And now the Chinese Securities Exchange Commission, through their long arm jurisdiction, they can also apply a fine to Luckin Coffee in between 10 to 100% of how much ever they owe to the investors in China. So I don't know exactly how how much they owe to the equity owners currently reside in China. I know there are quite a few. They at least owe 155 million losses to the bondholders who filed in court, who received the judgment from a Hong Kong court. I just came out with $100 million. It could be on the higher end, but I don't think it really changes the end result very much. So if we add everything up here, you have obligations in between 2.6 and 3.2 billion. I'm estimating Luckin Coffee's current cash position is somewhere between 600 million to 800 million. This cash position I could easily overestimate what's actually that's available to them, because they continue to open 10 stores per day. That's an average cost of $600,000 a day, while burning about 2 point some million by continue to operate around 7,000 stores. Because the last reliable financials that we had, they were losing about $400 per day per store. So when you multiply that by 7,000, that's $2.8 million cash outflow, plus the additional 10 stores per day. So they are probably burning $3 million a day over the past 40 some days. That's another, 120 to 150 million dollars gone. Whatever I give them could be a lot higher than what they actually have. But let's just be generous here and use 600 to 800 million dollars cash. We still came up short $2 to 2.4 billion dollars. So we know the company today is still not cash flow positive. How are they going to pay back $2 to 2.4 billion dollars without any additional capital? Maybe we can argue over the final shortage. Maybe some of the defendants will share some of obligations by spending out of their own pocket. Maybe some of the other institutions can cover a portion of the obligations. But it doesn't change the fact that the final obligation could be 4 to 5 times the cash that they have available to them on hand. What I believe will be in Luckin Coffee's interest is to reorganize and continue to operate through Chapter 11. There are quite a few benefits for them doing this. One is they can continue to stay in business. They don't have to liquidate their assets and no longer operate. So this way, it provides them a somewhat clean slate to start over. Two, through this restructuring, they can negotiate their settlement with the litigation lawyers in order to reduce what they have to pay back. Three, by restructuring, it's much easier for them to have access to capital outside of the capital markets through some kind of strategic buyer or some kind of partnership. Obviously, by going through a Chapter 11, they won't have to follow all the strict accounting regulations and also pay hefty fees to incur additional expenses in order to be listed in a stock exchange where they will not be able to regain investor confidence anytime soon. Therefore, there's no additional equity injection while being listed. And also, they can stay out of the spotlight for a while. With time, people will forget about the scandal and they can slowly recover from this disaster. And now, without the added expectation and pressure, they can follow a different business model and really stay true to what they believe will actually work instead of what the market believe will work. That way, the company may actually one day turn around because now they're working for themselves, not the expectations of Wall Street. And for the equity holders, I believe there are added benefits too, because believe it or not, actually under a Chapter 11, the equity holders actually have the same priority as bondholders as far as receiving their owed liability. If Luckin Coffee goes through Chapter 11, that means the company will continue to operate, and they will very likely to negotiate some kind of a payment plan over time so that hopefully the equity holders can recuperate and maximize the funds that they lost over time instead of sell off all its assets, and which are probably not worth a lot of money. Yeah, so this is still consistent with what I believe is going to happen to Luckin Coffee. They just don't have enough cash to pay back all the obligations, and I don't think the settlement numbers that I have is unreasonable. If anything, I think what I had could be on the lower side. Just like a professional tax return software will be able to find more tax refunds, a litigation lawyer will probably be better maximizing what the investors can claim as part of the litigation than I could. Because again, I'm not a lawyer. I'm not in business litigation, so I don't know all the intricacies, all the in and outs. But I'm just purely based on what the information that I have gathered to make the best estimate that I can as a investor. Because this information is currently not available anywhere else. So the final slide, I want to add a little bonus because I did hear some people mention because Goldman Sachs now own 76 million shares of the company, they will play a role in this deal to make sure that they don't lose all their money. It's actually being left out in a lot of the news articles because they seem to be just repeating themselves. But 518 million margin loan that was lent out to the chairman and the CEO, Goldman Sachs actually owns a very, very small piece of it. If you look at it, Haitong owns 140, so they lent out 140 million. Credit Suisse and Morgan Stanley each lent out 100 million, while Goldman Sachs, Barclays, and China International Capital altogether lent out $178 million. So each one of them has a very small piece. Goldman's holding, instead of 500 million, now it's actually only maybe 50 million. So that completely changes how much skin Goldman has in this game and the amount of motivation or the amount of attention they will actually spend over such a small position. Because Goldman currently makes $10 billion in profits per year. $50 million they can easily write off in taxes without feeling anything. Goldman has very little exposure. It is only managing the sale because the other ones were all involved in the IPO or the secondary offering. So there could be some kind of regulation preventing them from trying to sell those shares. So while I don't think any one of those banks are just trying to lose $100 million, but when you look at it, the $500 million loan that was lent out, by the way, a portion of it was already paid back before the default. So, and the risk was very spread out amongst 5 different lenders. And to institutions of that size, this is really just not that big of a deal. While they'll still try to recuperate as much as they can, this will not be a lifeline for Luckin Coffee to hold on to, hoping that they will somehow go out of their way to save the company. So somehow, I think Goldman would just try to sell those shares at maybe find another institution that still holds a large amount of shorts and try to cover that way, maybe add a discount of the current price, or just simply hold the equity, hoping that they can recuperate through litigation down the road. Just to reiterate, Luckin Coffee will be 100% liable to whatever litigation settlement that's going their way. The macro environment is not favorable to Luckin Coffee. Both administrations have huge interests to use Luckin Coffee to achieve their other political objectives. And Luckin Coffee will just not be able to have enough cash to survive this turmoil. So basically going through Chapter 11 provides the best chance for Luckin Coffee to remain as a business entity going forward.